So right now, crypto is doing absolutely nothing. Well, almost nothing. Bitcoin is hovering in the mid 60,000s area. Ethereum is drifting sideways. Altcoins are doing what altcoins do best in uncertain markets, quietly disappointing everyone. And at first glance, you might think, a calm market, lovely. But it really isn't, because this kind of price action is a bit like the silence before a storm, or more accurately, the awkward pause before something else breaks, and in crypto, it usually does. So in this video, we're going to take a step back and look at what is actually driving the market right now. We'll cover why Bitcoin keeps getting rejected at 70k, how geopolitics is dictating price action, which institutional investors are quietly doing something, why Ethereum and altcoins are lagging behind, and the signals that could tell us where we'll go next, because crypto is no longer operating in its own little bubble, its own vacuum. It has unfortunately grown up, which means it now has to deal with things like inflation, interest rates, and geopolitics. I know, not nearly as fun as meme coins. So let's start with the big shift. Bitcoin is no longer trading on crypto narrative alone. It's trading on macros. Over the past few days, Bitcoin has repeatedly approached $70,000 and then done what it seems to enjoy doing most at the moment, turning around and heading back down. This has coincided with rising geopolitical tensions, particularly involving Iran. According to coverage from major financial outlets like Wall Street Journal, Bitcoin declined alongside equities as uncertainty increased. Now, I think this is important because it tells us something quite fundamental. Bitcoin is not behaving like a hedge, it's behaving like a risk asset, which means now it responds to liquidity conditions, interest rate speculations, and global stability. In other words, Bitcoin has joined the financial system, which is great for adoption, slightly less great for anyone hoping it would ignore global chaos entirely. So if Bitcoin is reacting to macro, let's look at the macro and see what's happening. At the moment, as I'm sure you're aware, markets are being driven by geopolitical developments, specifically tensions in the Middle East. Now, when these tensions increase, markets tend to respond in fairly predictable ways. Oil prices rise, risk appetite falls, and traders begin to look a little nervous, which is a polite way of saying they start selling things, including their crypto. The process looks something like this. Tensions rise, oil prices increase, inflation expectations follow, central banks become less inclined to cut interest rates, liquidity tightens, and crypto doesn't particularly enjoy that environment, as we've seen. This is why Bitcoin's recent price action has felt reactive. It's not leading, it's following, which for something often described as the future of finance is slightly ironic. However, while all of this sounds rather negative, there is another side to the story that a lot of people aren't talking about, and that is that institutions are quietly returning. Beneath the surface, something interesting is happening. Institutional money is coming back. After a period of outflows, Bitcoin ETFs have started to see inflows again, crossing into the billion-dollar range over the past month. Now, this doesn't necessarily mean institutions are wildly bullish. They're not exactly kicking the doors down, but they are cautiously starting to re-enter the market. So what this means is that it suggests that some investors are viewing this current range as not as a danger zone, but as a value zone, which is worth noting because institutions don't tend to buy out of boredom. They buy when they believe the risk-reward makes sense. Obviously, Bitcoin's down around 50% recently, which tends to suggest that we are starting to enter discount overall. But that being said, some large players have slowed their accumulation, which suggests a bit of uncertainty, hesitation perhaps, or more bluntly, they're interested but not entirely convinced. And this creates a rather classic setup. Retail sentiment is weak, institutions are quietly buying in the background, and historically, that combination tends to precede upward moves in the market. Not always immediately, but often, eventually. So if institutions are accumulating, why does everything still feel so sluggish? Ethereum is currently in a slightly awkward position itself. Not collapsing, not rallying, just kind of existing. Recent data suggests that low transaction activity, reduced fees, and slower network growth, which are not ideal, have been slowing its growth in general. Because Ethereum's value is closely tied to usage, and right now, usage is not exactly booming. At the same time, Ethereum has drifted lower during periods of volatility. XRP and other altcoins have followed the same, which is admittedly not unusual. Altcoins always tend to follow Bitcoin when it's bearish, especially when confidence is low. I would say the current price action is pretty typical of a consolidation phase. Liquidity stays concentrated in Bitcoin, altcoins wait their turn, sometimes patiently, sometimes not. And that brings us to the real structure of the market right now. Bitcoin is currently trading well within a little bit of a range recently over the past few months, from between anywhere from 65 to around 70k, I would say. And it's been doing this for a while now, but every time it attempts to go higher, it's failed. You see, momentum is pretty neutral right now. Volume is declining and volatility is starting to compress, which in technical terms means the market is coiling up for potentially a big move in either direction. Think of it like a spring. The longer it compresses, the more energy starts to build up. Eventually, it will probably release in one direction or the other. The only problem is it doesn't tell you which direction, which admittedly is slightly inconvenient. The uncertainty brings us to the bigger picture. Right now, crypto is being pulled in two directions. On the one side, you've got all your macro pressures, geopolitical tensions, rising oil prices, delayed rate cuts, and weak sentiment. On the other side, you have structural support, institutional inflows, continued adoption, ETF expansions, and strong support being created in the local area. And the result of this is a market that is moving sideways, not because it lacks direction, but because it's had too many directions at once right now. And this is what is known as a consolidation or compression phase. And historically, compression phases tend to resolve with a big expansion. So the key question becomes, what triggers the move? There are three main things right now to watch. Geopolitics, of course. If tensions start to ease, markets will stabilize, Bitcoin may break higher. If tensions escalate again, expect more volatility and possibly to the downside. Rate cuts, I think, remain critical. More liquidity is always better for crypto, good conditions. Less liquidity, and we'll probably see more sideways and downwards action. ETF inflows are also very important because institutions are now driving a large portion of demand as well. So right now, the market is not weak, it's just uncertain, and uncertainty tends to lead to decisive outcomes, but they will be eventual and may take a while to play out. So if you found this useful, you know what to do, and as always, I'd be interested to hear your thoughts. Is this consolidation or a base for a higher move, or just a pause before more downside? Either way, I don't think it's going to stay boring for long.